You see the headlines about the stock market, you hear friends talking about their investments, and you know you should be doing something with your money. But where do you even begin? It feels overwhelming, complicated, and honestly, a little scary. If that sounds like you, you're in the right place, because that's exactly how most people feel before they start. In this video, I'm going to give you a simple, step-by-step roadmap that cuts through all the noise. No confusing jargon and no get-rich-quick nonsense. Just a clear path to help you move from feeling stuck to confidently making your very first investment. Before learning how to invest, it's important to understand why investing matters in the first place. One powerful force working against you is inflation. You feel it every time you buy groceries or fill up your car. Money sitting in a bank account slowly loses its purchasing power because prices rise over time. That means your cash buys less and less every year. Keeping all your money in cash is like running up a down escalator. On the other hand, the force that can work for you is compounding. Compounding simply means your money makes money, and then that money starts making even more money. If you invest $100 and earn 10%, you end up with $110. The next year, you earn 10% on the full amount, not just the original investment. Over decades, this effect can turn small investments into significant wealth. And historically, the stock market has been one of the best ways to take advantage of compounding. Many beginners are held back by common fears, but most of them are based on myths. One of the biggest fears is that investing is too risky and you could lose everything. While investing does involve risk, risk can be managed through diversification, which means spreading your money across many companies instead of betting on just one. Market ups and downs are normal, but historically, the market has grown over the long term. Another myth is that you need a lot of money to start investing. Thanks to fractional shares, you can start with as little as $5 or $10. You don't need thousands of dollars anymore. The final myth is that investing is too complicated. In reality, the most effective investing strategies are often the simplest, and beginners only need to understand a few core concepts to get started. A stock is simply a small piece of ownership in a company. When you buy a share of a company like Apple or Amazon, you become a part owner of that business. If the company grows and becomes more valuable, so does your investment. To buy stocks, you need a brokerage account, which is similar to a bank account but designed to hold investments instead of just cash. Opening a brokerage account online is quick and usually free. One of the most beginner-friendly investment options is an ETF, or exchange-traded fund. An ETF allows you to buy a basket of many stocks at once. For example, an S&P 500 ETF holds shares of about 500 of the largest companies in the United States. By buying just one ETF, you instantly spread your risk across hundreds of companies, making it a simple and smart option for beginners. Before investing any money, you should first get your financial foundation in order. This means paying off high-interest debt like credit cards and building an emergency fund that covers 3 to 6 months of living expenses. This emergency fund protects you from unexpected expenses, so you, have to sell your investments at the wrong time. Once that is done, the next step is choosing a brokerage account. Look for one with zero commission fees, no minimum balance, and support for fractional shares. Popular options include Fidelity, Charles Schwab, Vanguard, and newer platforms like SoFi. After opening your account, you'll link your bank account and transfer an amount you're comfortable starting with, whether that's $20, $50, or $100. For your first investment, it's best to keep things simple. Instead of trying to pick individual stocks, many successful investors recommend buying a broad market S&P 500 ETF. Funds like VOY, SPY all track the same market and have very low fees. These ETFs allow you to invest in the overall growth of the U.S. economy rather than relying on a single company. Once you choose your ETF, open your brokerage app. Search for the ticker, select how much you want to invest, and place your order. When you press that confirm button, you officially become an investor and an owner of hundreds of major companies. The real secret to building wealth isn't timing the market or finding the perfect stock. It's consistency. One of the best long-term strategies is dollar-cost averaging, which means investing a fixed amount of money on a regular schedule, such as every month regardless of market conditions. This approach removes emotion from investing and helps you buy more shares when prices are low and fewer when prices are high. Most brokerage platforms allow you to automate this process so you can set it once and let it run in the background. Over time, this simple habit can make a huge difference thanks to compounding. To summarize, the path to investing is simple. Build your emergency fund. Open a brokerage account. Choose a low-cost S&P 500 Make your first investment and stay consistent by automating your contributions. You now have a clearer roadmap to building wealth than most people ever will. If you found this guide helpful, subscribe to the channel for more simple and practical finance videos. Let me know in the comments if you've made your first investment or if you still have questions. Thanks for watching, and here's to your financial future.